Good evening, ladies and gentlemen, and welcome along to this IC Markets webinar using Fibonacci tools in daily trading step-by-step guide. My name is Chloe. I'll be with you for the next hour or so. And welcome along, everyone. I'd first of all, before we get started, like to give you an opportunity to have a quick look through this risk disclaimer slide. So if you could have a read through, make sure you agree with everything therein, and then we can get started with the webinar. Also, while you're reading that, just by way of an apology, I do have a 2-year-old whose bedtime it is. So apologies if any of that noise carries through. They are just next door at the moment. So a little bit of background information about myself. My name's Chloe. I'm a trader of 12 years and I'm based in London. I trade several different markets. I focus on Forex, commodities and indices, as well as other leverage markets. I'm predominantly a technical trader and predominantly a trend-based or momentum-based trader. So the majority of my trading is in the direction of the major market flow. So that's a little bit of background about myself. Also, just like to say that, you know, it's best if we keep this session as interactive as possible. I'm here for you guys. So if you've got any questions that you want to ask as we go through the webinar, then please do feel free to post those into the questions box. And in fact, why don't you take the opportunity now to post into the questions box, just so that I know that you can hear my voice okay, you can see my screen okay, and then obviously that will make for a much better webinar if I make sure there aren't any audio or visual problems before we get started. So have a look for that questions box, type your name into the questions box and let me know that you can hear me and see my screen okay. That would be fantastic. Okay, so with that said, I think we will get started. We'll have a look at the agenda for today. So the agenda for today, we are going to be doing this on the IC Markets MT5 platform, and we're going to look at setting up and understanding the Fibonacci tools. And then we're going to look at how to use Fibonacci tools to pinpoint buy and sell levels for trade entry. We're also going to look at those levels for stop loss placement and take profit levels. And we're going to do all of that by way of a live demonstration on the IC Markets platform. So without further ado, let me take you to that platform. So bear with me while I get that screen up. Okay. So you should now see my screen, which is the MT5 platform. Let me just delete off a couple of these things. So Fibonacci, first of all, before we get started fully with Fibonacci, let me explain a little bit about the way I trade. Okay, a little bit of feedback. Can't hear me. I wonder whether that's just an isolated case. Can everyone else hear me? Okay, could you post into the questions box if you can hear me okay, please? No other feedback that I can't be heard. So let me just bear with me while I just reply to this person. And hopefully they'll be able to log out and log back on and then be able to hear me. Okay, so as I mentioned before, I am a trend or momentum-based trader. So you might notice here that the chart that I have here is a chart of the Kiwi dollar against the US dollar, and that is a trending chart. Now, in order to properly utilize or successfully utilize Fibonacci, you first have to have an understanding about trend. So very, very quickly, because I'm going to try and build, I'm not going to teach a full strategy. I don't have time in 1 hour to teach a full strategy, but I'm going to try and build Fibonacci into the strategy that I use to trade. So there is a little bit of basic understanding I need you to have before we can do that. So a trend in terms of price action is a series of higher highs and higher lows. So here are the highs, here are the lows. They are getting progressively higher. Okay, it seems like there's an issue with the sound, so please bear with me. Good evening, ladies and gentlemen, and my apologies for the false start. It appears that some of you are having technical difficulties hearing me, or I should say I was having technical difficulties perhaps with the sound. I hope that that is now resolved, and thank you for letting me know in the questions box. So, seeing as you couldn't hear me before, I will just start by saying welcome along everyone to the IC Markets webinar using Fibonacci tools in daily trading step-by-step guide. My name is Chloe, and I will be with you for the next hour or so going through how I use Fibonacci in my trading. I am a trader based in London. I've been trading for 12 years now, and I'm predominantly a trend or momentum based trader. So I trade all markets from Forex to commodities to indices and other leverage markets as well. I'd just like to give you a quick moment to look through this risk disclaimer slide. Oh, fantastic. Thanks for the feedback, everyone, on the sound. A quick couple of moments to have a look at this slide, and then we can get properly started. It's the risk disclaimer slide. And also, I don't need to ask you for feedback on the sound, because thank you very much, everyone, now saying that you can hear me okay, so that's fantastic. Please do also ask questions as we go through. I'd like to keep the session as interactive as possible if we can. So if you do have any questions, please do let me know, and I'll do my best to get to as many questions as I can in the time that we've got. So that should be enough time to have looked at the risk disclaimer. I'll also repeat, for those of you who didn't hear me earlier, the apology. I do have a 2-year-old whose bedtime it is, so they are next door. Apologies if any of the sound does carry through into the next room. Okay, so let's have a look at the agenda for today then. We are going to be looking at setting up and understanding the Fibonacci tools on the MT5 platform. We're going to talk about how to pinpoint buy and sell levels for trade entry, stop loss placement, and take profit levels using Fibonacci as a tool to help with that. And that's all going to be a live demonstration on the IC Markets MT5 platform. So without further ado then, let me take you to my other screen, which is the IC Markets MT5 platform. Now, I would like to start by saying that Fibonacci is a fantastic tool, or it can be a fantastic tool if used correctly, but only in trending markets. So Fibonacci used incorrectly in a market that is not trending is not necessarily particularly helpful at all. Fibonacci is a tool that can be used in trending markets. So the first thing we need to be able to do is identify a trending market, and very, very simply, price action wise, what we're looking for in a trending market is a series of higher highs and higher lows. Here are the highs, here are the lows, and you can see that they are getting progressively higher. For a downtrend, we would be looking for the opposite, lower highs and lower lows. And you can see here on the chart that I have up, I've got the chart of the Kiwi dollar, and we can see the downtrend here. We've got lower highs and lower lows. Okay, so that's the first thing I need to do to identify my trend if I'm going to be looking for trending opportunities using a Fibonacci tool. A couple of other things that we can do to help identify trend, and I'm going to tell you this because it does feature in my trading and in my trading strategy. Now, I don't have time in just an hour to teach you a trading strategy as such, but I am going to try my hardest to show you how I incorporate a few different indicators with the Fibonacci in order to get the highest probability, highest reward to risk opportunities. So in order to do that, I'm going to put a couple of moving averages onto my chart. And so those of you not familiar with MT4, it's what we do is we come over here to the left of the navigator, find the indicator that we want to use. Now the moving average indicator will be underneath the trend option here. Moving average, just left click, drag it onto the chart. This will bring up this box here where we can choose the period of the moving average and the color of that moving average. So I'm putting the 10 moving average onto my chart there in black. I'm also going to put the 20 moving average onto my chart in blue, and I'm going to put the 50 moving average onto my chart in red. I'm just using the standard colors that most people use there. So those are a few moving averages. Now, the reason I've put them on at this point is because when we're discussing trend, moving averages are another indicator that can be used to help identify trend. So the shortest moving average, in this case the 10, will be closest to price. The longer moving average, the 50, will be further away from price. So the order of those moving averages can help to indicate trend. If the 10 is at the bottom and the 50 at the top with the 20 in between, that can suggest a downtrend, that can indicate a nice downtrend. If the opposite is true, for example, during this period here, then that can indicate an uptrend. So we notice that the 10 is at the top with the 20 in the middle and the 50 below. And for that period of time, actually, we do have an established uptrend with higher highs and higher lows there. So the moving averages can help to identify trend. More importantly, the reason that I'm putting them on the charts is because they can help to identify areas of equilibrium. And when we're talking about finding an entry into a trade in a trending market, what we want to do is, if the market is going downwards, we want to sell at a high price and take profit at a lower price. So we need to find that high price to get into the market in order to take the next move to the downside. In an upwards moving market, in an uptrending market, we want to buy at a low price and sell at a high price in order to make profit. So what we're looking for is a way to identify the highs and lows, or the potential highs and lows in the market. Brilliant question. The question is it a smooth moving average or an exponential moving average? I tend to use the exponential moving averages. They react slightly more quickly to the most recent price action. They're more weighted towards the most recent price action. And so I prefer them. Having said that, for the purposes that I use them for, it's actually possible to use either, because I'm just really using them, A, as a guide to help me identify trend, and B, as a guide to help me identify areas of equilibrium, but I don't use them on their own. I would never just look at this chart and pick a level based on a moving average and get in or out of the market based on that. There are always other factors that I use. So it doesn't matter hugely whether you use simple or exponential, but I tend to use exponential moving averages. So that is trend and how I use moving averages with trend. Now that we have discussed that, what I want to do is take you to the Fibonacci tool, and let's see how we can use the Fibonacci tool. So the Fibonacci tool is up here on your toolbar, and it's this set of lines here. So if you click on that set of lines, that will bring you up the Fibonacci tool on your mouse. So if you now click on the chart and hold the mouse down and then pull down and drop the Fibonacci tool, then that will put the Fibonacci tool on your chart. Now, in a downtrend like we have here, in order to use the Fibonacci retracement, this is the Fibonacci retracement tool, what we want to do is we want to start at the high and pull the Fibonacci down to the low. So I am kind of pretending that we're at this point in time here. So I've noticed that there is a downtrend. I can see lower highs and lower lows based from back here. So just noticing this price action here. What I've also done is I've also done my analysis on higher time frames. So I know really that I want to be trading short. And so I want to place my Fibonacci tool at the high point and drag it down to the lowest point at that point in time. So we're pretending this future price action hasn't happened yet. And I'm dragging the Fibonacci tool down to that lowest point. Now that will draw my Fibonacci retracement on. So the levels that I have here, I've got the 23.6 level, I've got the 38.2, I've got the 50% level. Now 50%, it's not actually a Fibonacci number, but a 50% retracement is a very commonly looked at level. And so it does help to have it on there. Using the Fibonacci tool to draw a 50% retracement is just an easy way to measure that out. So a lot of people tend to have that 50% level on the charts. And then the 61.8 retracement level and the 78.6 retracement level. So if you want to know how to put those levels on the chart, and good question, do you consider the candle's wicks in drawing the Fibonacci or not? More often than not, I will go from the very top to the very bottom. So yes, I will use the top of the wick of my high, and I will use the very bottom of the wick of the low. So yes, I do use the wicks when I'm using Fibonacci. It's not always the case. When I'm drawing horizontal levels, it's not quite so clear cut, but Fibonacci I will use the very top, so the very highest price at the top of the wick and the very lowest price at the bottom of the wick. Now, let's have a look at editing the Fibonacci tool. So you'll notice that you can right click on the Fibonacci tool and come up here with the properties of that Fibonacci tool. That will bring up this box here, and we can click to the next tab along, which is levels. And under levels, these are all the levels that are drawn on my Fibonacci tool. So level 0, that's a zero retracement, so that's the bottom there. And then 0.236, that's the 23.6% retracement, 0.382, that's the 38.2%, etc. If you need to add any levels on, you can simply click on add, and you can type in, for example, if you didn't have the 61.8 level on there, then you could add 0.618, and that will give you the 0.618 level. So you'll notice that on my Fibonacci tool, and this you may need, if you want to use Fibonacci extensions as well, you may need to do this. I just find that this is the easiest way to do it, rather than having to draw several, you know, one from the top to the bottom, one from the bottom to the top, etc. So you can put your extension levels onto your Fibonacci retracement tool down here. So if I right click there again and go to properties, I'm just going through this because I think I do often get asked this question, so I think it might not necessarily be straightforward, and I know that they're not on as default. So I have got my 161.8 extension level, and I've got my 261.8 extension level on the chart. I have to say the 161.8 level is the level that I most commonly use. But in order to get that on the chart, you actually need to add a new level, and the level is minus 0.618. The reason is because this is a retracement tool, so 100% retracement is up here, but what we're also looking is we're looking for an extension, and we will come to this a little bit later, in terms of where can we put our target. And so that's why I'm, just while we're editing the properties, I'm doing this ahead, I'm getting a little ahead of myself, but just so that you know how to add the extension levels onto your retracement tool, so that you only have to draw one retracement and you get these levels projected for you. So if you add a new level and add the minus 0.618 level, and then minus 1.618, so it's minus 0.618 and minus 1.618, and you'll notice I've described those as the 161.8 and 261.8. Those are my extension levels. So once you've done that, then these two lines should pop up on your chart as well. Okay, let me just check the questions. Okay, so now that we've done that, how do we use the Fibonacci then? First of all, for targeting trade entries, for pinpointing trade entries. So we have established that I'm a trend trader and I only trade with the trend, and so I'm only looking for trades in the direction of the trend. So let's just say that we have price coming down and I'm looking for a trending entry over here. So I'm going to draw my Fibonacci tool from the top to the bottom, and that gives me these Fibonacci retracement levels. Now, usually I will be looking for a retracement somewhere between the 38.2 level and the 61.8 level. For me in my trend trading, if the market is very, very strongly trending, then I could look at the 23.6, and the 23.6 level is commonly retraced to in a very strongly trending market. But generally, 38.2 is a level that I look at. 61.8 is pretty much the limit of where I would look at. Any retracement further than 61.8, certainly 78.6, yes, I could anticipate a move from that level. So if price was in a downtrend and it retraced all the way up to the 78.6 level, yes, it could come down a bit, but I would anticipate, if I were seeing price, it's moved all the way down here and then it's retraced all the way back up to the 78.6 level, I would anticipate potentially that there could be a move down from there, but at some point I'm going to get a higher low, and that trend would not necessarily continue for as long as I would need it to in order for me to make a decent profit out of the market. What I'm looking for is I'm looking for a trend continuation whereby that pullback comes and then goes on to give me another lower low. I want to trade a trend with the anticipation that that trend is going to continue. And so any retracement between around the 38.2% and 61.8% level that's good for me. But any retracement further than that, then I start thinking about that in terms of a potential reversal, or at least a pause or a consolidation. Perhaps price might start to range, but I certainly wouldn't be looking at the 78.6 as an entry thinking that price would then continue. It could continue, but it's less likely. So I'm always looking for my entries to be either the 38.2, the 61.8, or somewhere between them. Question, can you use Fibonacci extension with Fibonacci retracement? I tend to just use the one tool as I've described. So, I mean, what you can do instead is you can, once you have the bottom of the market, you can just draw the tool in the opposite direction, and you'll notice that those levels match up. If you see there at the bottom where I've got the 161.8 and the 261.8, those levels match up anyway. But in order to not have to draw it twice, I've just popped those levels, as I showed you, onto my Fibonacci retracement tool. So I get those levels on there, and those are the extension levels. Okay, so having said that I'm looking for a pullback to around the 38.2 or around the 61.8 or somewhere in between, approximately, what else do I need to see? Well, I'm also going to be looking for other things that are important in my trading strategy. Horizontal levels of support and resistance are very, very important in my trading strategy. So I'm also going to be looking for horizontal levels. I'm also going to be looking for moving averages. I generally tend to trade where price is somewhere in or around the 10 and 20 moving averages. In this case, price has pulled back further than that. However, what I do have is I've got this previous low level here, which is actually then, it's been bounced from once over here as well. Let's see if it is a relevant level over here. It's not particularly a very, very strong level, but we can see here that it's been support over here from August 2020. It's been a little bit of support over here from 2019 as well. As I said, with horizontal levels, it doesn't necessarily have to be the wicks. Then it's sometimes kind of a line of best fit between the bodies and the wicks of the candle. But we can see that this level has been respected quite a lot in the past. So then in terms of combining that with current price action and this Fibonacci retracement, once I've got the Fibonacci 38.2 level and it coincides with this previous low, which is a bit of a horizontal level, and it also coincides with the 50 moving average, that's when I start to think about a potential decent entry point. When I've got several factors all agreeing with each other, because what that means is that price is more likely to bounce in an area where there are more things to bounce from, because there will be some people in the market who are trading Fibonacci, some people trading horizontal levels, some people trading bounces from moving averages. And if you find an area where everyone's trading, well, then that area is more likely to cause a strong movement in the market. So it's more likely that your trade is going to head in the direction you want it to head in. Okay, let me just get to your questions. Does it have to be daily, or can one use the hourly or even 15 minutes? Absolutely, Sam. It does not have to be daily. I've started here on the daily, and in the interest of time, I might not get to show this across all the time frames, but usually all of the technical analysis I talk about is applicable on all time frames. So when I talk about trend and looking for higher highs, higher lows, when I talk about moving averages, I use the same moving averages across all different time frames. And same with Fibonacci. You can draw Fibonacci tools in a trending market on a lower time frame. I will see if I can try and find an example of that a little bit later on. but definitely it can be used on a lower time frame. The other thing that you can do if you're interested in trading on lower time frames is you can pick out an area. So I've picked out this area here as an area where my horizontal level, my moving average, and my Fibonacci are all converging, and that's where I want to look for an entry. And so then I could go, I'm just going to draw a line here. I could then go down to an hourly time frame. Let's see if we can find where that was. Oops, it was around here. So on my hourly time frame, there's my Fibonacci. Here's my my Fibonacci level, and this is the area that I pinpointed that I wanted to start to look for a trade. So you can actually start to look for a trade on a lower time frame. If this is the area, this is the level that I want to start looking for a trade in, then what I want to do is I want to look for evidence that the market might be turning around at that point. So what could I use? I could use a chart pattern, for example, or quite simply, when I've talked about trend as being a series of higher highs and higher lows, then what do I need in order to think that this is turning to the downside? Well, I need a lower low and a lower high. And there it is. There's my lower high. There's my lower low. Here's the horizontal level. And there's my Fibonacci level as well. So then, once price gives me that lower high and lower low, then I would be looking for opportunities beneath the horizontal level in order to take a short trade. Now, in this particular case, I wouldn't have found a trade that would have given me an awful lot of success. I would have perhaps traded around here, and I may have made a little bit of profit, or I would have been stopped out of that trade. But no problem, because then all I need to do is wait for the next opportunity. So over here, it's still on the daily time frame relevant. So then still on the hourly time frame, I'm looking for my lower high. There it is, and it's bouncing from the horizontal level. And so I would be looking for an entry somewhere below this point here. So that's one way that you can use it on a lower time frame, is find the level on the daily time frame that you're looking at and then try and find an entry on a lower time frame. The other thing you can do, of course, is simply go to a lower time frame and use the Fibonacci tool on that lower time frame. For example, let's find some trend on the 15-minute time frame. So for example, I suppose let's try this one. From the high there to the low there, and then looking for a retracement. So this retracement here, the 38.2% retracement, it also coincides around where this 20 moving average is. So there's another area to look at. I would also be looking at the 61.8 level, especially because it coincides with this area, which is actually where the trend turned from being an uptrend to a downtrend. So that area of support there. So absolutely, you can use it on an intraday time frame as well as a daily time frame. And then let's see what happens over here, going from the high to the low. So here we've got a pullback to the 50% level, but that doesn't really coincide with anything else. What I prefer is this pullback to the 61.8% level, because at least that coincides with this area here that was support, resistance there. But in the end, price pulls back and it goes past the 78.6. That's the end really of me looking for an entry point there. So I'm going to go back to the daily time frame just to continue illustrating this one. So there's the high and the low, and this is where I've pinpointed my entry. Now, I'm not going to just be pressing buy or sell at the level, at the Fibonacci level. What I need to do is I need to wait for price action to tell me that it's turning around, because what is there to tell me that this is going to retrace to the 38.2 level and not the 50 or the 61.8 level? How do I know that price isn't going to just plunge straight through here and go all the way up to the 61.8? How do I know that this is the high price and price is going to move down from here? Well, I've got to wait for price action to tell me that. And by price action, I mean candlesticks, bar by bar price action. So what I need to see at this level is I need to see bearish price action. So I need to see a seller candle. This one could be an option. If I were to use that as an entry, I would place my entry at the low of the candle with a stop loss at the high, as long as the stop loss is above my Fibonacci level and above anything else that I was using. So for example, the horizontal level as well, I would want my stop loss above there. So my entry would be at the bottom of the candle, stop loss at the top of the candle. In this particular case, I would have been stopped out of this trade. However, what happens next is we get another seller bar in the same area. So I would simply place an entry at the bottom of that candle with a stop loss at the top of the candle, and that's the one where price moves down. Now, once we're in a trade there, how do we target? So there are a few ways of doing that, but if you want to know the most common way that I use in terms of Fibonacci, then I will be looking for, first and foremost, the 161.8 as my ultimate target. Now that's quite an ambitious target. I will often look at other things for targets as well. I will always be looking for horizontal levels. Now, targets I'm a lot less strict with, I suppose, than entries. Entries, I'm always looking for something where there's an area of confluence between more than one indicator or more than one level to get me into the trade. I really want to be confident that that is the right place for me to get into the trade. So I'm looking for the Fibonacci and the moving average and the horizontal level. In terms of targets, I'm a lot more, I don't need as many things. If there's a horizontal level in the way of my trade, then that's where I'll be looking to take profit. So in this instance here, I will have been looking at this horizontal level to take profit. And in all honesty, I would have taken profit at that point, because that's far enough. If I'm looking at a stop loss up here and an entry down here, then that's 1, 2, it's a 3.5 to 1 reward to risk trade. That's perfectly adequate to me. Generally, most of my trades are somewhere between 2 to 1 and 4 to 1 reward to risk. So 3.5 to 1, that's a great trending trade. I would take profit at that point, and then if the trend continues, then I would look to get in again. So we can leave the Fibonacci there, because the next extension of that move could possibly come to the 161.8. So if I wanted to find another trading entry further down and trade, then that would be a useful area to potentially target. So we can look at, for example, over here, this is the high that we traded just then, and here's the next low. I'm going to erase this previous Fibonacci off, just so that we're not clogging up the screen too much. So there's the high, there's the low of that next move. Now this retracement came all the way up to the 78.6. So I would not necessarily have seen that as a good entry. However, what happens then is price actually starts trending again, lower highs and lower lows down here. So I would get rid of this one and I would start again over here. There's the high. I've got a new low down here. There's the 23.6. It coincides with not only the moving averages here, in this case the 10 moving average, but it also coincides here with this horizontal level. That level of support down there, and it's also been support here over a period of days in July here, and that's the level that's broken in order to start this new downtrend. So that would be where I would be looking for my entry. Once that is done, let me remove that off, then I would be looking for another one. So here's then the high, here's the low, and that is a retracement to the 61.8 level, etc. Now, with that particular Fibonacci, you can actually see that the extension comes down to here, so it does illustrate a really useful place to get out of trades, that 261.8. That would usually be my limit in terms of trading. And again, it depends how big a cycle you've drawn the Fibonacci on as to how ambitious that Fibonacci extension is. But if you're just drawing using the most recent high and the most recent low, then the extension can be a very useful thing. Let's do this one as well. So here's this is actually current market most recent high as we speak, and there's the most recent low. So the pullback has come to the 38.2 level. That also coincides with this area in and around the 10 and 20 moving averages. So I'm happy with that as a pullback. I just need to wait today for today's candle to close. Now, today's candle is quite a big candle. I usually try and choose smaller candles because they offer me better reward to risk. But as things stand at the moment, if this candle closes around this size, then that's fine for my entry. And I would be looking for a target around the 161.8 level. And that would be okay for me, because if my stop loss is at the high there, entry at the low there, then again, that looks like around about just over a 2-to-1 reward to risk trade, which is fine for me. So that 161.8% level would certainly be a target, if not the target of that trade. Let me see. More questions. More questions. Let me see. So, do I use stochastic RSI for more confluences? Okay, good question. I do use RSI, but I don't use it as a buy or a sell signal. I use RSI with convergence and divergence, so just to indicate the strength and the momentum behind the trend. So I'm really using stochastic and RSI to confirm the strength of the trend and the momentum of the trend, rather than as an entry signal. And will I identify my profit target based on the Fibonacci level and horizontal levels? Absolutely, yes. So I will prioritize horizontal levels. If there is a strong, and I don't know whether it's relevant in this particular market, let's have a look. If there is a strong horizontal level in the way of my trade reaching a target, then I will always prioritize that. So, for example, over here, well, it's difficult to use this one because this is that February 2020 price action, which was the beginning of the global COVID pandemic outbreak. That's when the markets really started to react to that. So this can be very spiky and hard to use price action. The reason I say hard to use is because it was a very quick moving market, very, very large candles. So I would be cautious about using that. I would certainly draw a level at that low point, and I would also have a level around the bodies there, and probably daily time frame we would get a more accurate illustration of that there on the daily time frame. We can see there the bodies of the candles, so that's more like the true level of support, where the bodies of the candles were, where the prices closed and then stayed above. But I will just have the wick in there as well. And then in terms of my trade right now, so what's happening right now is that price is just getting beneath. So this area here is that horizontal level. Price is just getting beneath. So if I'm entered into the trade beneath this candle, then it will also be beneath that area. But I will be cautious because that wick of that price action in 2020 is just here. Because it's just a wick and not an actual strong horizontal level, I won't necessarily take profits there or take all profits there, but I certainly will keep an eye out. If this was a strong horizontal level where I had seen strong price action bouncing at that level, then definitely I would be looking to take profits there. But seeing as it's not that strong of a level, I'm okay to just keep an eye on the trade. If it looks like it's reversing wildly from there, then obviously I will reassess my position. But if it looks like price is just going to trickle through, then I'm happy to take it further and down to my initial planned target down here at 161.8. Because remember that when we're trading trending markets, we're trading with the assumption that the trend is going to continue. Otherwise, what's the point in trading a trending market? We assume the trend's going to continue. Therefore, we assume that if we get in at the highest price we can at the top of a swing, the trend is going to continue, and then we can take profits. So we're assuming that the move to the downside is going to be longer than the move to the upside. Therefore, ideally, we want at least a 2-to-1, if not 3-to-1, reward to risk profit target. In answer to your question, Cider, Cider's asking, do I trade when I see a setup during the day, or do I wait, for example, for the London or USA Open? It's a brilliant question. I trade on daily timeframes. I also trade on intraday timeframes. So I suppose my most common timeframes that I trade on are daily, 4-hourly, and hourly. And then when I do trade intraday, which is these days only a couple of days a week, I trade on the 15-minute time frame. When do I trade? When I'm trading on the daily time frame, I will trade at the open of the daily candle. For me in the UK, that happens at 10 p.m, which is fine because it's just before I go to bed. Depending on where you are in the world will have an influence on whether you can trade at that time or not. For some of you, it might be the early hours of the morning, in which case, if you're trading on a daily time frame, there's no harm in waiting. If I miss trading at night before I go to bed, then I'm happy to turn my computers on in the morning, and if there's still a daily trade available to trade, I'll take it. So as long as it's in the first I'd say the first 8 or 9 hours of the day, really, that you catch the daily trades. And obviously, the later you leave it, the more likely it is that you would just miss the entry. If I'm trading on 4-hourly timeframes, I just trade every 4 hours that I'm awake. So I don't trade through the night every 4 hours, obviously, but when I'm awake and when I'm available, when I'm not with my little boy, for example, then I'll trade every 4 hours. I actually have an alarm set on my phone that goes off every 4 hours at the start of every 4-hourly candle, just so that I don't forget to check whether there are any trades. Anything lower than that, hourly time frame, for example, I actually do try and trade according to the markets. Now, I trade a lot on Forex, and I trade a lot of Forex cross pairs, and I tend to find that, for example, the Kiwi, the New Zealand cross pairs with New Zealand dollar, for example, Kiwi US dollar that we're looking at now, I tend to find that trades there on those, on the Aussie dollar, on Japanese yen quite often as well, they can tend to set up at the beginning of the day. So in the very early hours of the morning, straight after the new daily candle has opened, I will start to look for potential trades on the hourly time frame on those currency pairs, specifically Kiwi dollar, Aussie dollar, dollar yen, and cross pairs of in between those. That's where I have tended to find my most successful trades, is at the very, very beginning of the new day on those currency pairs. If I'm trading the euro dollar or the pound against the dollar or any of those crosses, then I will tend to find that they move a little bit later on in the day. I don't really, in all honesty, I don't really have a set time to trade those because, you know, for me, I can trade those at any time. It's the Aussie, Kiwi and Japanese yen pairs that I tend to try and catch early on because those tend to be on the move early on. So I hope that answers your question. Not really about Fibonacci, but I think it was a really good question, and I think it's important to answer everything I possibly can. So just check there. Okay, fantastic. No worries. I think it's a really important point to make actually, because I've really found some fantastic trades on the Aussie pairs, the Kiwi pairs, and the Japanese yen pairs in those hours of the morning. It's really, really worth looking out for them. Not every morning, definitely not every morning, but it's really worth just having a look if you can at that time, because if the market is going to move and you can find an entry according to your strategy, then that can often, I certainly find it very useful for myself. Okay, so in terms of Fibonacci, we've looked at Fibonacci retracement, we've looked at Fibonacci extension in terms of targeting. Now, all there is left to say really in terms of my teachings on Fibonacci is that yes, this can be used across timeframes. So the only thing I would say about trading trend on lower timeframes is I usually use the higher timeframes as a guide for direction. So for example, right now at this very minute, the Kiwi dollar is trending down on the daily time frame. So if I want to trade on the hourly time frame, then I only want to be trading down because I know the daily time frame is trending downwards, and I know that the most successful trading opportunities that I have are in the direction of the higher time frame trend. So if I'm going to trade on the hourly time frame, then I want it to be in the direction of the daily trend. So, and again, that could be if I'm trading with using Fibonacci or moving averages or whatever strategy I'm trading. That is my kind of non-negotiable, is I will trade always in the direction of a higher time frame trend. So if I'm trading on the 15-minute time frame, let's go down to the 15-minute time frame and let's see what's happening right now. I want to be trading in the direction of the hourly trend and the 4-hourly trend, ideally. Definitely the hourly trend has to be with me. So look, I've got a downtrend on the 15-minute time frame. I want to trade short, but I have to check what's happening on the hourly. If the hourly is trending downwards, which actually it is, because I do have this lower high and lower low, and I've got these moving averages, the 10 at the bottom, 20 above that, 50 above that. So I'm okay to consider this a downtrend on the hourly, therefore I'm okay to trade short on the 15-minute time frame as well. What I won't do is I won't trade, for example, let's see if I can find a little bit of uptrend on the 15-minute time frame. So for example, here on the 15-minute time frame, where's that? 30th of September to around the 4th of October, let's say. So let's look at what was happening on the hourly there, 30th of September to around the 4th of October. Now that is questionable for me because I've got a proceeding downtrend here, lower high, lower low, and here also. This is where I stop seeing the downtrend on the hourly time frame. But really, until I start seeing an uptrend, I'm not really looking for any long opportunities until at least here. And ideally, you know, these moving averages are starting to cross over now, by which time I've possibly missed the best part of that 15-minute uptrend, and we get into this ranging price action and then the downtrend. So that's why I tend to stay away from trading against the direction of the trend, and I tend to prefer to stick to the higher time frame trend. It does mean exercising a lot of patience, but it does provide me with the best reward to risk opportunities and the highest probability opportunities. Going back to that early in the morning UK time, so yes, I would say kind of from in the UK from 10 p.m. onwards, 10 p.m, 11 p.m, midnight, 1 a.m, 2 a.m, those are the times where I would tend to find those trades on the Aussie pairs, the Kiwi pairs, etc. Now, in the UK, I'm not up these days at 1 a.m, 2 a.m. I used to be. Before I had my little boy, I was definitely a night owl because I found my best trading was at that time. Now, I do my daily trading at 10 p.m. I look to see if there are any hourly or 4-hourly trades setting up at those times. If there are, great. If not, I switch off and go to bed and I don't think any more about it. So I don't really catch those early morning trades anymore. But they do still happen because I always look back at the markets and think, oh, I wish I'd stayed up last night. I can't stay up because having a 2-year-old is enough to keep me awake at night, aside from trading. The difference between MT4 and MT5, I am not the world's best at tech. I couldn't really tell you the difference between MT4 and MT5. In terms of functionality, I don't think there's an awful lot of difference. I can do everything with MT5 that I could do on MT4 and vice versa, really. Either of them are absolutely adequate for my needs. On the daily time frame, and CTrader is fantastic as well. Yes, IC Markets do have CTrader. It's fantastic as the web-based platform, which I do also use, and there is also a downloadable version as well. I have to say I use the web-based version of CTrader, and I actually really like it. But I'm not really technically enough to be able to tell you what the differences between these things are. I think a lot of it comes down to personal preference, to be honest with you. And yes, I think in terms of coding, perhaps a lot of people are more used to coding with MT4, so there are a lot more custom indicators available for MT4 than MT5. Again, you know, it's personal preference. You know, you need to find what indicators you need for your strategy, or what if you are a techie person, and what indicators you want, and use whichever platform suits you for that. There's something for everyone, to be honest with you. So I hope that's given you a little insight as to how I use Fibonacci, and I've tried to shoehorn as much of the other stuff that I use for my strategies as well. In terms of stop loss, I always trade using candlesticks, and I always place an entry at the bottom of the candlestick with a stop loss at the top of a candlestick. That is more often than not the way I trade. I do know that people can trade Fibonacci by using an entry. So for example, having the 38.2 as an entry and sticking the stop loss at the next Fibonacci level up. So for example, having an entry at the 38.2, having the stop loss at the 61.8, and then having the target at for example, the 161.8, you know, and that would give you approximately a 3.5 to 1 trade as well. But I prefer to trade candlestick by candlestick because that shows me the exactly what's happening between buyers and sellers at any one moment in time. So that's the way that I tend to trade. In terms of whether I prefer swing trading or day trading, why do I prefer swing trading rather than day trading? In all honesty, I started trading because I wanted a way of earning money that could fit into my life rather than the other way around. I never wanted to be a trader that had to spend all day every day staring at the screen and trading. I always wanted to have a family, and I wanted to have something where I could earn an income while spending the majority of the time with my family. I've been trading for 10 years before I had my little boy, and I did a lot more intraday trading then, partly because you know, I had a lot more free time then. Now I definitely do focus on swing trading because I want to be really efficient with the use of my time. If I didn't have my little boy, then I would be doing more intraday trading. You know, I'll be honest with you, I would be doing more intraday trading, but I just don't have any desire at the moment to spend that much time away from my boy. And what I do in terms of swing trading makes me enough profit to live off anyway. So I don't have any need for that. Aside from that, swing trading, so trading on the daily time frame and 4-hourly time frame, I find my equity curve a lot smoother. So I'm a lot less likely to get chopped in and out of trades due to news or very volatile markets. But intraday trading has its benefits as well. I find a lot of much higher reward to risk opportunities on an intraday time frame. So for example, trading on a 15-minute time frame, I could easily make, you know, maybe a 7 or 8 to 1 reward to risk trade, where on a daily time frame that you know, I might just make a 2 or 3 to 1 reward to risk trade. So definitely pros and cons to each. It really depends on an individual. You know, what's right for me is not necessarily right for everyone. So I hope that answers you. We have come to the end of the hour, so I'm going to just take you back to the slideshow very briefly so that we can finish off with a little bit of contact information for IC Markets. These webinars do get recorded and put up on their YouTube channel, so check back maybe in a day or two if you want to watch the recording back. If you need to speak to anyone at customer services, they've got a fantastic customer services team both at the end of the phone and at the end of an email. So those are the contact details there. And they do have the usual socials as well, Twitter, Instagram, Facebook, so you can get in touch with them on there as well. So I hope you found it useful. Apologies again for the technical difficulties at the start, and I do hope to speak to you again on another webinar very, very soon. Cheers everyone, have a fantastic evening.